The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN, your number one source for technical analysis for trading and investing. Welcome to the April 23rd, wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, a daily investment newsletter service that is the intelligence for creating your financial freedom. My outcome, as always, folks, is to help you to become a better money master and to provide you with the tools that, well, just simply tools that help to leading an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go check out one of our tools. This is the tool I call, Thanksgiving should really be thanks living. Thanksgiving centers on things to give thanks for, and more importantly, a grateful mind is a mind that will eventually attract itself to great things. It's our attitude of gratitude that opens the door to abundance in our life. And Thanksgiving, if lived on a continuous basis, not for just one day, if it's lived on a continuous basis, it'll create more good in your life. And that's why Thanksgiving should really be thanks living. Because thanks living is a way of life. And it's a way of life no matter what our circumstances are and no matter what challenges each of us may face. You see, perhaps the most difficult, yet the most powerful of all, is to give thanks for our problems and for our challenges. The reason is this. As we face our situations, as we overcome our obstacles, here's what happens. We become stronger, we become wiser, and we become more compassionate. Something to think about. For me, as kids, all of us, we learn mathematics by what? By solving problems. And we prepare, if you play any type of sport out there, we prepare for an athletic event by practicing against what? A stronger or weaker opponent? That's right, a stronger opponent. Have you ever played a game of chess? Who would you learn more from? A stronger or a weaker opponent? Look, a stronger opponent is someone that we can learn far more from. So I say what we should be thankful for and be grateful for is for the problems that we have in our life. Why? Because we will become better. There's an ancient proverb, you've heard me say it before perhaps, goes like this. Says a donkey, think about this, a donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. Sometimes we feel the weight of our circumstances and we lose sight of that precious nature of the many gifts of life that we carry. Adversity, when overcome, strengthens us. And therefore, we are giving thanks not for the problem, but for the strength and the knowledge that will result from our experience or the experience that we're about to have. Perhaps, folks, we should give thanks ahead of time for all those problems. For we will grow, we will get stronger, and we'll overcome every challenge that we face. Thanks living. That's truly what it's all about. Let's go see how these markets are doing out here. Is there any thanks that we're going to give to them? Well, we got flat markets. Dow futures, they're up 1 point. They're trading at 16,459. S&P futures back 2 points right now. It's trading at 1872. NASDAQ futures down 6, trading at 35.79. King dollar looks like it's back 16 pennies, trading out at 79.83. Euro on the move out here. The yen on the move. Goldilocks on the move. Well, it's up $3, trading out at 12.84. Silver up 9 pennies, trading out at 19.45. Light sweet crude up 8 cents right now, trading out at 101.82. Our call number is 877-927-6648. Thanks so much for joining us. A quick peek around the globe here. We see the DAX is off 19 points. FTSE down 7. No big deal out there. Hang Seng was off 221 points, down 1% last night. Shanghai off 0.25%, and the Nikkei was up 1%, closed out at 14,546, up 157 points. Now, if you're watching us on TigerTV, and I hope that you are, of course, if you're driving, if you listen to the radio, I don't want you to be watching TigerTV. Remember, you can always catch the archive of this show on Channel 9, and if you are maybe on a train somewhere, or you're just simply at your office, and in one ear you got your earpiece out there and you're listening to the show. Remember, you can watch this show streaming live on that little smartphone of yours, assuming it's not in your pocket or your purse. Just go to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 smartphones. Click on that. This show will stream live to you, and you'll be taking a look at the New York Stock Exchange. I've got the weekly chart for the New York Stock Exchange. It goes back to 2009. Shows these little V-shaped bottoms that have formed out there. Question was, hey, Steve, and I got some emails yesterday, a couple emails saying, how the heck could I be so bullish? All I'm really doing, it's not really me. It's not Steve that's bullish out here. What you have to understand, bullish or bearish, all that I'm doing is reading to you the story of the charts. That's all that I'm doing. The charts are, I'm just a storyteller. A good storyteller, I'd like to think, by my ability to go ahead and read the charts. I can't tell you what's going to come next. I really can't. I can't tell you what's in the next chapter out there, no more than anybody else can. What we can do is we can use different sets of tools to take a look at past experiences. We can take a look at lightning bolt patterns that help us predict where prices may go to. You know, plenty of tools out there, and those are great tools. You want to be able to use those in your arsenal out here. All that I can do is tell you what the charts are saying to us now. So several emails yesterday saying, how could you be so bullish? And again, what I want to say is, it is not me. It is the charts. So we'll take a look at the charts out here. If we take a look at the weekly chart now for the New York Stock Exchange, coming off of the lows out here, we're going to see a couple of these V-shaped bottoms that have formed and failed. Of course, the ones that have formed and failed, if I take you back here into the time frame, back into April of 2010, of course, that preceded the flash crash out there. That failed, but it gave you a signal here. It gave you a key reversal session back in this weekly chart, the week of May, when the key reversal took place, the week of April 30th, 2010 out there. Maybe this here might be a V-shaped bottom, the one coming off of February 25th, 2011, all the way to the high put in May of 2011. You know, that sell in May. That was a key reversal session on a weekly basis out there. Key reversal sessions, they were something I covered a couple days ago because we took a look at the S&P and the Dow, and I said, can you find any? We looked at the monthly charts, even more important, right? I said, can you find anything that looks bearish about this? And the answer was no. You clearly couldn't. And then, of course, it was a little bit of a trick question because I pointed out to you, well, it depends on where the Dow and the S&P actually finish out the month, a week from today. Because a down close versus the open at the beginning of the month will actually form a key reversal session. We're not there yet. We are most certainly not there yet. We're going to take the information that we've got here today. Well, if we take a look at the most current V-shaped bottom that formed out here, this is the one really off of the high from January. So as we came in, this is a week of January 24th. It's the New York Stock Exchange we're looking at. It's when it got to 10,401.77. That was above, by the way, the 2007 high. So the New York Stock Exchange has been a laggard out there. It would make sense it's been a laggard because it's the wider breadth, the wider swath of the marketplace. It finally got up over the 2007 highs. It's a 6,000-point consolidation breakout. Are you hearing me? A 6,000-point consolidation breakout if it can hold above those highs. 10,387, I believe, is the number. Right now it's trading out at 10,599. So you got this nice little V-shaped bottom that had formed out here. It formed back on February 5th, really, from a day standpoint, the week of February 7th, 2014. So the damage that was done a couple of weeks ago, really just a week ago, right, inside of the Russell 2000. We'll take a look at those charts to really see what that damage really looks like. Inside the NASDAQ composite, what that really looks like out here. In the case of the New York Stock Exchange, no damage. On a weekly chart, no damage out here. Now, where are we at? It closed yesterday at 10,599. It's traveling into a little shooting star out there. A shooting star candle, that's for the week of April the 4th. It says, okay, you've got some resistance because a shooting star, much like a hammer, only this occurs at highs. That says that high out there at 10,669.43. That's your resistance level. Folks, if the New York Stock Exchange is able to manage closing above that level, it's got freedom to run. It's got no resistance in its sights out here. It's at all-time highs. It's above a 6,000-point consolidation level. It says that the rally will continue, or at least should continue. Now, does that mean that we won't see the market pull back today, pull back tomorrow? No, I actually believe that we will see a bit of a pullback occur over the next day or so. I don't know if it's going to be today. I thought maybe it might be yesterday, and it wasn't. Maybe it'll be today. Maybe it'll be tomorrow. We will see some type of pullback. And yes, that pullback will go ahead and give us some type of information about just how much conviction there really is on this breakout. Volume or not, It's only one portion of a stock chart. It's only one characteristic of a stock chart that's out there. And I don't know about you, but when I read a story, and that's all we're doing, we take a look at the stock charts out here. When I read a story, I'm more than willing to read that next page and see what twists and turns it might provide to us. And right now, I don't know what that twist or that turn might be. But when it does come, we'll take a look at it, we'll assess it, and we'll go from there. But as we speak right now, these markets want to go to higher prices. I don't care if it's sell in May is just around the corner. I'm just telling you what it is as of April 23rd, 2014 out here. And that's the story on the New York Stock Exchange. Again, it closed at 10,599. As soon as it takes out, or if it takes out, and I do expect that we will see it take out these highs out here, 10,669.43. There will be no more resistance inside of the New York Stock Exchange until the next chapter is turned out here. Even if we take a look at the weak link here, inside the so-called weak link out here, that would be the NASDAQ. This is the 120-minute chart. There's going to be a turn. We're going to see it happen here before we see it happen on a daily chart. And right now, there's no turn in place. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I began opening up the show. We're talking about Thanksgiving, talking about hurdles out there that didn't each of us have to overcome hurdles from time to time. And, as a storyteller of the charts out here of the stock market, there's hurdles all the time that we can find. And so, the stock markets, we've got really a little bit of divergence, if you will, or we've got a hurdle that the area of the market that let us down clearly was the NASDAQ composite, was the NQ, was the Qs. I've got the QQQ ETF up on my screen. Easiest for us to take a look at that because each of you out there that have some charting system, you may not have access to the futures accounts or what have you. Maybe you don't even take a look at the NASDAQ composite, but most certainly you're taking a look at the Qs. So I've got the Qs up on my screen. And so the hurdle here, the hurdle that has to be overcome is going to be the Qs here getting above this descending price channel that is traveling in. Now, yesterday, during the intraday period out here, we had price get very close to, maybe it touched the top of that descending price channel out here. And the descending price channel, we're just using co-located opens and closes. We're using the bodies of a candle versus the wicks, which are the extreme emotions, the upper or lower shadows out there. And so I'm using, as my descending price channel, I'm using the open from March 21st. That price out there was at $90.61. I'm using the open from April the 2nd. That open was $89.59. And in essence, that comes right into conjunction with the open of April 4th, when that was out at $89.29. Yeah, $89.29, and $89.59 was April the 2nd out there. So a pretty good price channel along the top, and that's really what we're focused on right now. And so that's really the hurdle. So with price getting up to that level, it would make sense that, maybe today's a day where we see price maybe try to test it or pull back. And so not out of the woods yet from a bullish standpoint when we take a look at the charts here, and this will be key. It'll absolutely be key. So New York Stock Exchange, wider swath of the marketplace. Let me tell you, there's a chart I shared with my clients this morning. It's in the newsletter. Folks, if you've never test drove Mastering Probability, you ought to go do it right now. You can do that. 30 days unconditional money back guarantee. I'm not going to share that chart with you guys here on the show this morning, but it's a chart that it clearly shows that the New York Stock Exchange is in a major takeoff mode out there. And if the wider swath of the marketplace is telling us versus one sector, which was the biotech sector that really began pulling things down, the message here is clear for me, and that is this, that if we see, or when we see the Qs get above this descending price channel, then that'll tell us that what has been dragging us down is now ready to participate to the upside. We're not there yet. As I say, I don't control what takes place on the very next page that we turn over there. What I am willing to do, though, is take that information, come back, and then reassess from there. So that's where the real hurdle that I can see inside the marketplace exists. Unfortunately, that hurdle is up against these hurdles. They're up against the liquidity hurdle, and that's a tough one to overcome. That's the VIX index, well below the 50-day exponential moving average, which today is priced at 1463. It's trading out at 1319, or closed, I should say, at 1319. When the VIX is below the 50-day exponential moving average, it's in either bullish to sideways move or modes out there. Of course, as you know, we also take a look at that liquidity gauge. That's the euro Japanese yen as we take a look at that on a daily basis here. We're not seeing a ton of enthusiasm. Of course, it was the euro Japanese yen that really gave the signal that the move lower inside the markets was overdone. It was not right. It was not right at all because we were not seeing a lower low inside the euro Japanese yen, and it's this currency pair that always works. Now, that's got to be put behind us. That pattern has resolved itself, and it's resolved itself by this either new rally or market bounce that we have seen inside here. What we can say about the euro Japanese yen on a daily basis is neither overbought nor oversold. It's making small-bodied candles, so it doesn't exactly have the conviction, but it couldn't bust out the lows. And until it busts out the lows, these markets will not move down with any form of conviction whatsoever. Or if they do move down and the euro Japanese yen doesn't, you'll be back with another divergent pattern inside of the marketplace. So it looks to me what is the more likely outcome here is that the euro Japanese yen will get its act together. It will try to bust out the highs out there. That being said, that will go ahead and put some fuel inside of the marketplace. If you take a look at Goldilocks right now, you've got gold is trading up $3.12. What did gold do yesterday? This is the June contract that we are looking at. It came back. It's trying to bust out this swing point. It didn't have enough gusto. It did not have enough volume yesterday. That's the swing point from April Fool's Day, from April 1st, down at 1277.40. So far, a rejection on both price and volume. No bullish reversal signal, though. That always makes that move suspect. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Although no one's really out of the gate here, the Dow basically unchanged out here. Trading out at 16,514. The S&P looks like it's down about a point, trading out at 1878. Composite off 5 points right now, trading down 41.56. Russell 2000 off about 60 cents. So nothing big here in the market as we speak. I'm running into another delay here, so I got to close down one of my systems out here, see if that's what's causing the early morning problems out here. Leading the charge, the upside, though, we've got Alumina Inc., ILMN is a ticker symbol, up about 5% this morning, up $7 and change out there. We've got GW Pharmaceuticals, GWPH, that's up about 10%, up $5 and change. We've got Manpower Group, MAN is a ticker symbol. They're up $5, about 7%. Skechers, USA, remember buying those shoes for my kids when they were just the little lads. They're up about 12.5% right now. That's up $4 and change. FMC Technologies up $3. Skyworks Solutions up $3. Zoom Corp, XOOM is a ticker symbol and the name. That's up 16%. Boeing up about $3, up 2.2% out here. Leading the charge to the downside, brain salvage surgery, Intuitive Surgical, ISRG, down about $30 right now, off 7%. VMware down about $9, off 9%. Netflix off about $9. Cree, CREE off 9%. So we've got some percentage-wise, we've got some fairly decent movers individually to the downside here. We've got Amgen, AMGN is a ticker symbol. They're down about $3 here. Norfolk Southern, NSC off about $3. Apple down $3. Google down $3 to $4. Apple will be out with the earnings after the bell. Usually they report right at 4:30. So you'll get the news and the action on that during Tom's show out here. We've got Lincoln Electric, Lincoln Logs, ELECO is the ticker symbol. They're down about 4% off 260. Let's go check out silver, light sweet crude. Let's see what's going on there. Then we'll take a look at some of these stocks individually, see where they're at here. Silver right now, it's still trading into the December 31st swing point out there. So until that either the break above the high, which is 1985, or a break and test of the low or below the low, that would be that would then set up a run down to that June 23rd, I think it is, or I think I got to go all the way back. I've got the current contract up here on my screen. In any event, right now we'll take things one moment at a time, and it's that December 31st swing point where silver is trading into. So not providing us with any kind of bullish information out here. If we take a look at light sweet crude, let's go see what light sweet crude is doing. Light sweet crude off yesterday with some pretty good volume behind its move, 186,000 contracts. That was after trying to take out its most recent swing point high. That was from March the 3rd. Looked like it was going to do it. I never got above now resistance here. If we take a look at the red line going across my screen out here, that's really set up from the swing point from March the 3rd. That was your resistance level, 103.45. We can see it was hit with a doji candle on April 16th. A doji candle coming into resistance has a ton of meaning out there, and of course the meaning there is that the high of either the doji or the resistance area that it was coming into becomes your resistance point. And in fact, light sweet crude never got above that area, which was 104.10. Looked like, and there still is that potential, although yesterday's action kind of limits that potential. There still was that potential. What I was looking for was a butterfly pattern out here. It could still happen. It could still form. That butterfly pattern was 1.272 butterfly. The price projection on that, I believe, was around 106, 105.36 would be the number on that 1.272 butterfly. And until light sweet crude breaks out this little rising price channel out here, and that's really going to be its first test, it may find support in about that $100 area. Right now it's trading out at 101.84. I can't give you the exact amount because it depends on which day would hit the bottom of this descending price channel. If we're to be today, it's probably about $100 even Steven out here. That's what's going on inside the light sweet crude. If I take a look at what's going on a intra-period time frame, it's a 30-minute chart. A 30-minute chart here for light sweet crude right now, and it is attempting at least a counter trend rally of yesterday's move out here. So this does not complete until when 10 o'clock here. So obviously the next half-hour session, but you can see that it is trying to begin a bit of a counter trend rally here, at least on the 30-minute chart. But that is not a clear sign as of yet. If we take a look at bonds, see what bonds are doing here this morning, then we'll go take a look at some currency pairs, and then finally some of the things that are moving and grooving in the marketplace. Not a ton of movement here, at least not yet. Bonds, again, doing nothing more than running into resistance out here, and that's at that 135-ish type level, of course. Bonds to the downside, limited, because to the downside here, you're looking at a little trend line that's coming off of the lows here from January 2nd. That's the red diagonal-ish line that you see on my screen out here. Until that level is broken, that should act as a support area. So bonds not really doing a whole lot, and I'd have to say that bonds really kind of losing their correlation, their direct correlation as to what is going on inside of the market. And so I would say that you would just simply trade bonds separately from whatever the market may be doing or showing to us. If we go take a look here at the currency pairs, let's look at the euro, U.S. dollar. Let's go see what it is doing here right now. Let's see. Well, we're not at the end of the month. We're certainly not at the end of the week. It's hump day out here. But if we do take a look at a monthly chart here for the euro shows that it's up above resistance, and it is trading right into that descending trend line coming off of the July 2008 high. Of course, that trend line connecting at the May of 2011 time frame. You can see the body of the candle really right now just above it. So not a long-term breakout, not as of yet. If it were to close, right around the 139-ish area, that would be a different story. Then we'd see a real break. So a week from now, we'll have a pretty decent idea whether or not price is going to be contained in that longer-term descending price channel that bonds. They are above the horizontal support, so that is nice, and that's a good breakout bullish sign out here. That is from the high of February 28th, 2013, that number 1.3709. Let's take a look at the other currency pairs. We haven't looked in on the Great British Pound here recently, so let's go take a look at that Great British Pound, U.S. dollar. This has broken out of a long-term consolidation pattern. I do mean long-term because it takes you all the way back into 2009, August of 2008. Well, really takes you back into January of 2010. It's August of 2009 that it has its sights set on as its next target area to the upside, and that price is at 1.704. This is a weekly chart that we are looking at. This black horizontal line on my screen, that had been a significant area of resistance. I mean, it was tested for a couple of months out here, and then finally it was broken through with conviction out here. That conviction was a wide-ranging bar from February 14th. Had a candle here, looks like a hammer, smells like a hammer, really was not a hammer candle. And the reason why it wasn't because there was no downtrend that was established here on a weekly chart. Nonetheless, that long lower wick out out here was telling you that it was getting ready to try to take on that resistance area. It, in fact, did. Wide-ranging bar. Price came back, tested that area, meaning the original consolidation, tried to get back into the consolidation lows, and no. Said, I don't want to be there anymore. And now what it wants to do, it wants to take out its next swing point. Well, its next swing point, once it gets above that high from August the 7th out there, $1.70 or so, it ought to make a move all the way up to that 1.823-ish range. That'll be both the 0.618 retracement level, and it will come very close to equaling the measured move of that consolidation. And that is what's going on inside the Great British Pound. From a weekly standpoint, what you'd want to be looking at is you'd want to be looking at maybe on a daily chart, Gartley buy patterns, A to B equals C to the downsides that would complete in order to play this currency pair to the upside, because on the weekly time frame thus far, it is telling you that it is a breakout to the upside, and it is a nice breakout to the upside. If we take a look at the U.S. dollar, Japanese yen, much like the euro, Japanese yen, not really doing a whole heck of a lot here. It has not been able to take out its lows from the March 3rd level, nor has it been able to really take out its highs. So just trading sideways, neither overbought nor oversold out here. No real kind of, well, I can't say it's directionless because it certainly is making higher highs and it is making higher lows. So it does look like it wants to continue its advance higher. Right now it's above the 0.382, right at the 0.382 retracement area. Looks like 103.04 is really next up on its target list out here. If we take a look at the U.S. dollar index, which is obviously the basket of currency pairs of the euro, the pound, the yen, the Canadian dollar, the Swiss franc, the Swedish krona out there. Right now this has pulled back this morning, trading out at 79.90 out here. As far as retracements thus far, let me get rid of that. What it has found, it has found support down here, this bar from December 18, 2013. That was the Uncle Ben Bernanke bar out there, if you remember that day. And that is the support level. That is at the price point of $79.50. It was really tested. There was a slight close below it on April the 10th, but it immediately got back inside that area on April the 11th out here. U.S. dollar index, until the euro, the pound, or the yen have a ton of movement in it. You won't see a ton of movement here inside of the U.S. dollar index. And of course, the euro represents, I believe it's like about 55%, somewhere right around there, of the weighting structure inside there. Let's go take a look at some of these stocks here that are popping and dropping this morning. Let's take a look at Manpower. MAN is the ticker symbol. That is leading the charge, the upside up about 8%, MAN. And up with some decent volume. Let's go see what it's trying to do and take out and trade into. So it's up towards its swing point high. So it's taking out a B point. Well, it's not really a B point of an A to B equals C to the upside. It's taking out a swing point, though, which is April the 2nd. That high, $82 even, 802,000 shares. So far, it looks like it's traded about 252,000 shares as we speak today. Got a bit of a gap that it's trying to. This is where it began to break down. We can see it did have some wide-ranging bars to the downside. This gap down on the trading session of January 23rd. We'll draw a red line across the top of that. That is the resistance area, so it has moved up into that area. It has sold off. We'll see if that continues to act as a resistance. You'll need at least two more tests of that level to confirm a resistance point. The swing point here, which it has not yet hit, that only has 305,000 shares, so it's trying to attack the December 26th high out there. Let's pull this back, the low of which is 86.07. It has not been able to hit that here today. Otherwise, Manpower, just look here, looking at some volume out here. Let's put this on a weekly chart. The chart does not look too bad, at least on the daily side of life out here. That does not look too bad at all. On the weekly chart, that swing point, which it has hit. So on the weekly chart, it's inside there. It must have hit that then this morning. The low of which is 85.10 has 1.2 million shares. And so the week here, as we enter hump day, it's already, it's pushing, Yeah, it is. So it's pushing into that. Let me refresh my screen and make sure I've got accurate volume data and readouts here. Yeah. So it's pushing into a weekly swing point with volume. Now that, How about that? So Manpower looks like it wants to get above the 87.15 level out there. Now, on the weekly chart, if we were to do that, if we were to close above 87.15 with more than 1.2 million shares, that would set up a pretty nice A to B equals CD to the upside out here. That's what's going on Manpower. If we take Manpower Group. Let's take a look at Illumina, ILMN. Is the ticker symbol. It's up 4%, up $6 and change, trading out at 154 right now. It's trading into a swing point. This stock chart does not look too bad either. This looks like it came back and tested a breakout session here. And let's see what kind of, and I did it with lighter volume out there. Let's just start from scratch. Let's take this chart out here. So we take a look at Illumina, ILMN. You can see I'll put a couple lines of support 1 and support 2 on here, and then we'll go ahead and we'll put the volume. This equity here broke out, did it with a wide price spread, we talk about accelerated volume. Well, that's an understatement. That was on the trading session here from January 17th. So January 17th breaks out with 7.2 million shares, comes back and tests that area here recently, back on April 15th as the markets were making a low and potentially a significant low inside the markets out here. This was being tested with 2.3 million shares. 2.3 going against 17 million, or 7 million out there. So that's a nice test. Never actually touched the top of the January 16th swing point, but you had a nice little bear separating line out here. That bear separating line, or bull separating line is more accurately stated, from April 16th. That was your bullish reversal out here. Now today what it's doing is trading into the swing point from April 2nd, has 1.9 million shares. It's already up there with 1.3 million shares. That's pretty powerful. That's a daily stock chart. It should be able to take that out and then run for the hills out here, and the hills would be the high of March the 5th. That level, 181.58, 1.3 million shares up there as well. That is on Illumina. Stock chart looks to be pretty good. Right now, Dow's off 19, S&P down 4, Composite down 21, Russell 2000 up 4. Looks like we're getting that little rest that we need. Will it be 1 day's worth of rest, or would it only be 20 minutes worth of rest? I don't know, but we'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. So the Dow's off 18 points. The S&P is down about 3. The NASDAQ Composite down 17. Russell off 3 points. Let's go check out the TAS Signal Box market profiles out here. Let's take a look at the daily, weekly. Let's do it for the week link out here. Let's do it for the NASDAQ. Get a feel for what's going on out here. Now, as I was pointing out yesterday, if you're watching this on TigerTV, you're going to see a number of different colored lines out here. Just focus on the ones in the upper right-hand corner. You're going to see a lime green line. You're going to see a blue line. You're going to see a little red. And these are all horizontal lines that we're looking at. Those are the market profiles. Those are the areas, in essence, what John Logan, his team, they'll refer to the green line here as your unfair low. What that means is that really acts as like a support area. If price is below that, that's where you want to get short. If price is above that, depends what type of trader you are, and depends what other type of signals you're looking at. But that could be an area of consolidation, whereas when price is above the red line out here, so the red line is going to be what's referred to as the unfair high. So that's your area of congestion that becomes your level of resistance. Once price is above resistance, right, old resistance should what? Become new support out here. Once price gets above that, then you should be looking at long positions. So it just depends on, the tight length of these boxes out here. It depends on the type of trader that you are, whether or not you want to play the consolidation patterns from top to bottom or what have you. What's really important about this as we take a look at the weekly chart, what's interesting about the market profile here is on the weekly chart as the NASDAQ was moving down, it ran really right into that support level, that green line out here. And that didn't mean that you couldn't make a nice little living there. I'm playing that trade by going short somewhere along the highs out here. It's just important to know that on the weekly basis, there really was no destruction that was done as far as from the longer term getting a short signal in utilizing the market profile system. And folks, if you haven't had a chance to test drive the signal box, just come over to the homepage at TFNN.com. You may know we've got a Tiger Dollar promotion. That is not going to last long. I believe it may be over the end of this week out here. But look, just don't procrastinate. Just simply do it. Make an investment. Best investments you can ever make in life are the investments that you make inside yourself. We spend a lot of time feeding our bodies. The key is being able to feed your mind out there. So go sign up for the Tiger Dollars while you're doing that. If you have not tested out the signal box, John does a video for us each day out there. Go check out those videos. There's another nice tool that you can add to your arsenal. You can also use that inside the eSignal platform. That's what I have up here on my screen right now. So that's another way to use it and test it. It works on equities, works on futures, works on everything. Here comes the daily chart now for the NASDAQ. Now, the daily chart, it's up above that unfair low. The daily chart shows that we saw a little breakthrough of that old support level. Right now, it is kind of in mid-stroke out here. It really ought to, what this is really suggesting to me, what we ought to see, we ought to see the NASDAQ futures get up to about the 36.44 level, 36.69 on the daily basis becomes that resistance area. And then it will be there that will help us to understand whether or not that is the extent of the move, and this is just simply going to consolidate. But that's how I am reading this chart here at the moment. If we take a look at a shorter-term time frame out here, let's take a look. Let me switch this over. Well, I'll try to switch it over. I don't know if I'll be able to do that here in the next 10 or 20 seconds out here. I don't think I can because I didn't have it set up. I was going to look at the 120-minute chart here for you. Let's see if it'll pop up on the screen. But if it doesn't, folks, it is Wonderful Wednesday, and I want to thank you for starting your morning with us. Right now on the 120-minute chart, you've got price that is traveling right down into that little support area right around the 35.61 level. Of course, it's a 2-hour chart that we're looking at on here. If it breaks that 35.61, we'll probably see price pull back to about the 35.32. The question is that your next buying opportunity? Have a great Wednesday, folks. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.